So today, we're going to start with the hidden structure. It's called the hidden structure. So what we usually do in the hidden structure. So let's say we have a downtrend. We are creating lows, and at this time we're creating lows. Let's say we come to break this structure right here. After breaking this structure right here, we usually expect price to come back to respect our breaking retested structure, our BR. Though sometimes it's a little bit more risky, especially when you're taking these BRs in the higher time frames. So sorry. So what we usually do in a situation like this, let's say we have a BR and the BR is in the higher time frame. Let's say it's in the daily time frame or maybe the 4-hour time frame. Because like most of the BRs, let's say when price reverses comes to retest, price doesn't usually expect respect at exactly point. It rarely does that. Most of the time, price usually exceeds at some point, then price makes a drop. So what we are going to do, we are going to find the exactly point where price is going to reverse. By doing this, what we usually do is let's say this is our trend, and at this point, this is our line, this is our anticipation. So right here we have the two reversal candlesticks. Let's say these are our two reversal candlesticks right here, and these are the weeks. This is the first week, and this is the second week right here. So what you're going to do, you're going to place two lines to make our boundaries. We're going to place the first line at the beginning of this candle week right here, and we're going to place the second line right here at the beginning of this candle body right here.
Okay.
Yeah. The reason for us placing these lines, it's remember when you talk of a structure begins from the candle body to the candle wick, right?
Yes, sir.
So when you talk about the break and retest structure, that means it begins from this candle body to this candle wick right here. So we'll be
Mm-hmm.
expecting price to respect anywhere around this area. And you might find that between these 2 points, we have a lot of pips, let's say 100 pips. So the risk is more high. That's why we usually try to look at the exactly point where price is going to reverse. So after creating these two boundaries, we are going to focus at this point right here. This point right here. This point right here. At the, between these two lines, our anticipations will be around here, around this trend. It will be a trend or maybe a candlestick or something, somewhere around here. All of our concentrations, all of our focus will be right here, okay, whereby we'll be dropping to lower time frames, trying to find anything that we know. When I'm talking about anything that we know, we might find an invalidation or maybe a structure retest or maybe a breaking retest structure or maybe a new invalidation. Any structure we know that we will find around this area, that will be our entry. Okay, let's say the more you drop to lower time frames, the more clear the entries will be. So let's say at this time frame here, you'll just see an impasse. It could be a full impasse. Dropping in a lower time frame, you might also find it's still an impasse. Okay, then you might drop again in another lower time frame. Let's say the 30 minutes time frame. Then you might find an entry, maybe a structure retest. You have to drop again in another lower time frame. You should have at least 2 to 3 anticipations. in order to be safe to not miss an entry. So at this point, we'll be expecting price to come to respect our anticipation, the structure we found around here to create more lows. As how I said, it could be any structure we know that we might find around here. So that's an example. Let's say when you have a downtrend, and just in case it's an uptrend. So let's say we are creating highs, and this time we are creating highs. Okay, so we are creating highs. Then at this time we came to break this structure right here. And after the break of structure, let's say these are our two candlesticks right here. So this is the first week, and this is the second week right here. So at this point, as usual, we'll place our first line right here at the beginning of this candle week, at the longest candle week. That will be your point. You shouldn't place your anticipation right here. You should place it right here. Remember, this is it's the end of the candle of the candle week. And the other line, you're going to place it right here at the beginning of this candle body right here. So we'll be expecting price to come to retest any structure we know that will be around this area right here. It could be any structure we know, an invalidation, new invalidation, any kind of structure we know, whereby we'll be expecting price to drop, then to come and retest any structure we know around here to create more highs. So let's go to the live chat to look at some examples. So in this time frame, we're going to look at some examples. So we are going to look at the
Hello, sir, are you there? Hello? Hello?
hello.
Hello, are you there?
Yeah, I'm there. So
Oh, yeah, good.
I was saying we were trying to look at a hidden structure, right? So when you're looking at a hidden structure, just look for some examples. Okay, I think we have a hidden structure around here. So we can see that price broke structure right here. Okay, after the break of this structure right here, we're supposed to try to look for a sell right here. So we're expecting price to come to make a retest. This reversal right here to get this sell from right here to right here. This was a clear sell in lower time frames. So what you're supposed to do is to place two lines, this line right here and another one right there. After that, we'll drop to a lower time frame. Let's say the 4-hour time frame. When you're dropping from time frame to time frame, you should be dropping with in order. Okay, you should
Okay,
be
sir.
dropping in order. Let's say from the daily to the 4-hour, from the 4-hour to the 1-hour time frame. You should take it in order. So in this lower time frame, we are going to look. Remember, right now we are our focus is around here, right? So we can see this is the structure we have right here. It's a break and retest structure whereby we could place our entry right here to get this sell from here to somewhere here. It's a lot of pips in V75 from somewhere here to somewhere here. Okay. Something like 300 pips. So on the other example, let's look at other more examples. Let's try here, maybe we find something. Okay, this is our break and retest structure right there, and these are our two boundaries. So we'll drop to the 4-hour time frame. We'll drop to the 1-hour time frame since we were in the 4-hour time frame.
Okay.
Dropping this time frame, we can see that our first entry was right here in this break and retest structure, and we'll drop to lower time frames. Let's say the 30 minutes. Dropping to the 30 minutes, we don't see any clear entry right here. So we'll drop again to the 15 minutes. We'll be dropping and dropping and dropping until we find 2 to 3 anticipations.
Okay.
That's when it will be safe to trade. And you can see right now, our second anticipation is right here. This entry right here. So right now we have two entries. We have this break and retest structure, and we have this break and retest structure right here. So we are going to delete these two lines to make it more clear.
Okay.
Yeah. So you can see that price came to retest our entry right here, and it was a sniper entry with a very, very low risk at this point right here. So let's go. Do you have any questions still there before we proceed,
No,
or
no,
we
please, sir.
make more examples?
No, please, sir.
So I can proceed.
Yes, sir. We can proceed.
Okay, there's something called the re-entry. Something called the re-entry. So a re-entry is a second entry that we usually get from the market. Okay, so second entry we usually get from the market, whereby a re-entry, let's say we have an uptrend, then at this time we have an invalidation point right there. Then price comes to retest our invalidation point, and let's say price starts to to create lows. At this time, let's say we missed this entry. Let's say we were late and we just found like price already made a move, something like one candlestick. Let's say a one candlestick from the 1 hour time frame or the 4 hour time frame. So what you're going to do, we'll drop to lower time frames. We'll drop to lower time frames and start to look for a sell at this area right here. Most of the time, price usually makes a pullback. It's usually something like a candlestick wick for price to continue making more to make more sells. Let me try to look for an example.
Yes, sir.
Though sometimes it may be in a lower time frame, and sometimes you might find it in a higher time frame. Let's say we have an invalidation right here. We're expecting to come to retest, and after this retest, price might drop. And let's say we missed this entry right here. As long as we know our trend, it's a downtrend, and we're expecting to make more sales, then you may make an anticipation at this break and retest structure or invalidation right there. But you'll be expecting price to come to retest any of these two to create more lows on the downside. So let's look at some examples.
Yeah.
Let's say in this entry right here, the entry we took yesterday but one. So let's say price came to retest on this entry right here, and let's say like we missed this first move, and we just came across the charts when the price already moved something like one candlestick from the 1 hour time frame. So when we say like we'll be looking for a entry, we'll have to drop to lower time frames
Okay.
to look for a sell. Remember, price usually makes some pullbacks. Also this buy was a pullback. So you can see right here we had an entry. Price came back for a structure. No, it's an invalidation X. Remember, we talked about the invalidation X that has no invalidation. Remember?
Yes, sir.
Yeah, we can see we don't have any invalidation right here. Then our price came to retest our invalidation X. So we can try to drop in lower time frames and see if price had another structure to retest somewhere here. So we'll drop to the
15 minutes.
15 minutes. In the 15 minutes, you don't see any structure. We'll drop again to the 5 minutes. We drop to the 5 minutes. And in the 5 minutes time frame, we had a new invalidation right here. And we also had a break-in retest structure right here. Though you can see none of these were respected.
Mm-hmm.
Let's try to drop in a lower time frame. So in this time frame, we can see that price came to respect on this structure right here. on this structure right here. So this was the first entry we had, and this was the second entry we had right here. And the second entry we had, it was a structure retest. So the structure retest. Remember, we say that the more you drop in lower time frames, the more your sniper becomes more accurate, though you will be having a high possibility of missing entries sometimes. So as you can see here, we had a very small drawdown right here, and Tilda, do you have any question about the re-entries?
No, please, sir.
Okay, so what you're going to learn else, it's called the trend breaking support. How can we know if the trend is still valid, or maybe the trend has changed, or any updates from the trend? So what you're going to be considering is the break of structure. That's the most thing we usually consider. So let's say we have a downtrend. The only first evidence that will give you an info that we still on a downtrend, it's when price breaks structure. Let's say price breaks structure right here. That means we have a confirmation that we still have a downtrend. And let's say price comes to break again this structure to create a new low. That means we're still on a downtrend. Okay, but when price, let's say, comes and break this structure right here, that means you have a possibility of making an uptrend. And remember, when you break this structure right here, that's when we look for an invalidation, right? So we'll be expecting price to come to respect our invalidation or our break-in retest structure right here for price to create more highs. And at this time, price is creating more highs. Remember, we just broke this structure right here. The break of this structure gives us a confirmation that the uptrend is still supported. So it will encourage us to look for more buys on this new trend. So price may drop, then price comes to respect maybe our hidden invalidation right there to create more highs. So at the time price is creating more highs, we've already broke another structure right here. So this is how we usually look for confirmations of trend, whether the trend is an uptrend or the trend is it's a downtrend. It also depends on the time frame. We're going to look at the time frames when we get to the top-down analysis, how to combine everything, and how to look for an accurate entry. So right here, it's how we look for a trend, and how to identify if the trend is in a consolidation or the trend is it's in an uptrend or downtrend. It's okay. Let's say when you have a downtrend like this, then at this time price comes to break, let's say break this structure right here. Okay, then price drops again to break this structure right here. This is the first confirmation that we have a high possibility of getting a correction. Then price may come and break this structure maybe right here. Then price drops to break this structure right here. When price breaks, gives you a confirmation of a new trend. Let's say price is trying to tell you that we are beginning to make an uptrend. Let's say right here. Then price changes the direction to a downtrend, and at the same time price changes again the direction by breaking this latest structure right here, showing you that we have an uptrend, then breaking the structure again, giving you a confirmation that it's a downtrend. Then Through this, you will know that the trend that we have right now, it's a correction. And another point on how to trade corrections. Remember, when we have a correction, the correction usually pays on respecting the most high structures and the most low structures in order to be safe. So let's say we have a correction like this. Let's say price usually comes to respect these low structures most of the time, according to my experience. Then price will create something like this. Then it will go to respect the most high structure. Then price will do anything right here to come to respect the lowest structure. So most of the time, the people who will be making losses during a market like this are people who will be taking trades at the middle of this correction. But for us, we'll be taking opportunities from the most high points and the most low points. By doing this, our risk will be small, whereby our stop loss will be somewhere around here. And also right here, our stop loss will be somewhere around here maybe, or around down here, more than people who place their trades at the middle of this at this structure. So most of the time, price usually makes something like this in a correction. Do you have any questions over there? Hello? Hello?
Hi.
Yeah, do you have any questions for that?
No, please, sir.
Okay, then let me send you this meeting so that you can
Okay,
keep
sir.
on with yes.
Okay, sir.
Yeah, so you can keep on with the practice. In case there's
Okay,
any
sir.
question, you'll inform me.
Okay, sir. So,
Uh,
please, when is the next class?
yeah, pardon.
When is the next class?
It will be tomorrow.
Okay, sir.
Okay.
Okay, so I'll be waiting for the recording.
Yeah, let me send
Thank you,
it.
sir.
Let me send it right now.